Hey, 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 it is another beautiful day. We're above ground. That's always a good thing, right? But I wanted to talk to you today about something that, you know what? A lot of people are making this big money mistake and they don't even realize it. So I just wanted to pop in and kind of talk about that a little bit. I'm going to open up my phone so I can see who's joining us because that's always nice to know. If you are watching from Facebook or something, I use StreamYard. So you need to give it permission so that I can see who you are. That would be nice. So I can connect with you. But anyways, I'm going to talk about 5 reasons why your mortgage insurance might be the biggest mistake that you are making. And when I'm talking about mortgage insurance, I mean the type of insurance that they give you. It's sometimes called creditor insurance. If you have a mortgage in Canada, and they say, would you like it if your family was taken care of? If something happened to you, this mortgage would be paid for. It sounds great. And, a lot of times they actually make it seem like you need that to get the mortgage. And so a lot of times we're so excited to get our mortgage that we just don't ask a lot of questions. But these are 5 reasons why that mortgage insurance might actually be a huge mistake to your pocketbook. I definitely have learned this along the way, and I'm going to share it with you now. So, mistake number 1, honestly, is that you don't have any control over the money. So if something happens, right? So you pass away, that money pays off the mortgage. Okay, it sounds good, but let's think about it a second. The mortgage is paid off, but what about all the other expenses? Is there money to pay for the funeral? Is there money to pay for the debts outside of the mortgage? Is there money to pay for food and heat and all those other things that we need to pay for when we have a family to take care of? So, would there be a better way of having that money come into your family and you have control over it versus the bank having control? I've seen some stuff. So if you know anything about me, we experienced a wildfire in my city in 2016. So many of us, we had to evacuate in a number of hours. Our city almost burned down. And since then, I've seen so many things. I've learned so many things that you would never think of that happens, of the ways that the bank can really hurt us if they're in control of our money. So I always want people to have control over their money, not the banks. Who do you think is going to be better to make decisions regarding your family and how money's spent? Hey, thanks, Emmanuel. You or your family or your bank? I don't know. So I want to have control over that money. So when your mortgage insurance gets paid out, they pay off the mortgage and you don't have any control over what happens next. Number 2 is mortgage insurance has decreasing value. So what does that mean? So your mortgage insurance payment is calculated and maybe it's $50 a month. But what happens every single month when you pay your mortgage? Your mortgage is going down, right? Maybe it's not going down as fast as you want it to go down, but your mortgage is getting lower and lower every month. But does that mortgage insurance payment change? It actually doesn't. It'll stay that same $50 a month. So your mortgage might start out being $500,000 and $50 a month to cover that mortgage if you pass away. And then halfway through, you only owe $200,000, but the $50 is still the same. So it has decreasing value on that $50 that you're using. Number 3 is you have no control over the product. So what happens is your mortgage insurance is tied to your mortgage. And so when rates go really low, like they are right now, there's some amazing rates. I've been helping people with that. Actually working with a couple right now where they're getting $3,000 of their penalty paid for to switch to a new provider so they can get an interest rate as low as 1.5%. But anyways, if say that person wanted to do that, they want to change providers. Now they're moving companies. Maybe something's happened with their health and they're not eligible to get that mortgage insurance with the new provider. So now they're stuck saying, oh, I had to keep this not so great mortgage rate with this provider because they're the ones that hold my mortgage insurance. It happens. And so you don't have control now over where you go for a mortgage, and you don't have control over if your family is getting the best rate. So I want you to control the product and the choice of it, again, not the bank. You want to control things. You want to make those decisions for your family. So when you have your mortgage insurance tied to that mortgage, now you're sometimes stuck staying with that provider because you want to keep that insurance, but maybe you're also keeping a not so great mortgage anymore. Number 4 is you have no legacy with it. So it doesn't always makes sense to have permanent insurance, something that lasts until 100 years old, basically is something that's permanent. But sometimes it does, or sometimes people just don't know the difference. And so they are in something that when they turn a certain age, usually when you're like 71, 75, you can't get insurance anymore. The idea was that most people don't hold a mortgage when they're past retirement, but more and more we see people going into retirement and they still owe on their mortgage. It's happening more and more as Canadians fall more and more behind. So you're still owing on that mortgage. You used to have it covered by mortgage insurance, but now you're literally too old to continue it. And you're also too old in a lot of cases to get insurance elsewhere, or it's going to be super, super expensive. So that's another risk with it, is that you can't convert it to something permanent if you decide later on, hey, I really want to make sure there's money there for my funeral no matter what. Hey, I really want to make sure that I'm leaving money to my family even in those golden years. That's something that becomes important to people sometimes as our priorities change. But with mortgage insurance, you don't have that option. And number 5 is the one that I think, just for me, really, really solidifies my belief that mortgage insurance could be a huge mistake for your family. It's underwritten at time of death, which means when you're dead is when the bank decides if they're going to pay out your mortgage or not. I don't know about you, but I think that's the wrong time to be figuring that out. I want to know when I'm paying my $50 a month that my family is going to be taken care of no matter what. So that's a huge deal with mortgage insurance. It's underwritten at time of death. To me, that is not the time to be figuring out if my family is going to be taken care of or not. I cannot come back from the grave and change things. I want to know that what I set up for my family is going to be there if I need it. So, you know what? I don't know about you if you have mortgage insurance. I know a lot of people do. A lot of people don't know that there's other options out there that might be actually even better value for their family. But to me, these reasons alone are a good idea to look elsewhere. So depending where you are, there's lots of great people out there to chat with and walk you through this. But no insurance isn't a great thing either. So if it's mortgage insurance versus no insurance, I'm glad at least you have mortgage insurance. You've done the right thing. You've done something to protect your family. Kudos to you for that. But these are 5 things you might want to consider, and you might want to look and see if there's another option that will use that money better and better protect your family. I work with people, and a lot of times as well, they're in a lot of debt these days. Like I said, more and more people are coming into retirement age and they still have a mortgage. You know, things are happening. I was reading something yesterday. It said, I think it was 25% of people are expected to not recover from the COVID impact on the economy. Certainly if you're in your later earning years, a lot of those people are now spending their savings to get through this time. They don't have enough time to catch up. So there are some great things that can be done that you can learn. I have a sheet that I've made up. It's just 10 tips to find money to help you get out of debt and increase your wealth. So 10 places I look to try and find extra money for people. If you want that list, I'm happy to send it to you. I would love you to look at it and see and message me back and tell me how much money you actually did find. So that'll be fun. If you have any other tips, if you have any value, please do comment below. But if you want those 10 places to find out where you can find more money for your family in the things you're already doing, send me a message. I'm happy to send that list to you and see what you find. Have a great day.